we got two economic models here, and we're shifting from one to the other. We've talked about this a lot. We're shifting from a public sector, taxpayer funded model to a private sector, risk capital funded model. And the previous model, or the one that we're shifting out of, the public sector model, was an attempt to repeal the business cycle. When you got a publicly funded economy, you don't have a business cycle. Because
We haven't had one for years, yeah.
every time a recession shows up, you spend. Now you either print or you borrow if you don't have enough tax revenue, which you don't. And if you raise tax revenue, you worsen the problem. So we've repealed the business cycle, I would say, since Greenspan. Since the Greenspan Fed, helicopter Ben and all of that, Bernanke.
So it's been 30, 35 years now.
Yeah, we've repealed the business cycle. You haven't seen recessions because the government steps in and floods the market with liquidity. So now we're going into another cycle, another model. And I predict, for what it's worth, that you will see business cycles again. You will see recessions and expansions. And when things get dicey, private capital will preserve its money. You'll see the kinds of recessions that we used to see, and they'll be deeper and
Hey, everybody, welcome back to Markets and Madness. As we say, the place where we discuss the madness that occurs when economics, politics, and personalities all move in different directions. Tim and I today, Thursday, in I could call it the end of a crazy month, those last 2 days, but it's certainly, we're getting closing in on the last week. How you doing, Tim? What are you
pretty
thinking?
good.
What are you seeing?
Yep, pretty good. Spent 2 days on the road, the worst two possible days to be driving when the markets are going berserk. I managed to get an order in from a gas station in South Carolina. It actually worked out. These are really wild markets.
Well, we said last week, two-way risk is here, and it couldn't have been more present, you know?
Yeah, I
It,
think we're looking for trading ranges now, I think, for the next few days anyway. Look for overreactions and fade the overreactions. I started to pick up some manufacturers. I took a small position in 3M, wrote some Tesla puts. I bought Caterpillar. These are the ones that are really going to benefit from a change in the climate.
yeah, I think that's smart. I sold a lot of Tesla puts as well. Various strikes, low deltas from May, June, July, scaled it all the way out, earning some good premium. And if the bottom falls out, I'm happy to own it down there. We'll see how it goes.
Yeah, that makes sense. The thing about Tesla is it's become kind of a popularity contest on Musk. You know, the sentiment swings if they don't like him. The other day he called Peter Navarro dumb as a box of rocks. Yeah, that was
Yes,
kind of interesting.
because Peter Navarro said that Tesla's not a U.S. auto manufacturer; they're a U.S. auto assembler, and I think that's what pissed them off a little bit.
Yeah, well, I don't expect Trump to jettison Peter Navarro. Peter Navarro went to jail for Trump.
Yeah, but Musk got him elected.
Yeah, that's true.
You know, I think he's going to have some allegiance there.
Yeah.
They're both very strong Type A personalities, A plus plus personalities, and I don't think they're going to stand for each other's bullshit. But I think right now they're coexisting, living with one another, and helping with the end game in sight. You know,
Well, Bisson's emerged as the star of the show.
who?
Claire Bissont, the Treasury Secretary.
Yes, yes, absolutely. Yeah, he speaks. For a guy who has been in the markets for 40 years, he was the Soros fund manager, I heard. He's done all of these. He's been so involved in the markets to speak so down to earth. He's not double talking. He's not Greenspan. He's not playing any of those games.
And he knows what he's talking about, too. He was
Yeah.
talking about the intricacies of the funding markets and the repo markets. And you could tell, I'll tell you a story. In the crash of 87, overnight, the markets had moved big down, massive moves, actually dwarfing yesterday's moves,
Hmm.
15, 20% down globally in global markets. And I went in the morning and I had trading authority, but I didn't have any credit authority. So I announced to my traders, my government traders, that we would be financing our own books and we would not go into the repo market. I didn't want any trades on the books with the government brokers because they were melting. I mean, the
Hmm.
market had melted. Asia was down 20%, you know. I didn't know where these people stood. So I said, don't fund the book. We'll fund the books. You need cash, we'll fund them. The bank will fund them. And that's what we did. We did our own repo, essentially. Um, about an hour later, I had heard that people were calling up saying, look, I need some, I'll swap out some old 10-year for new 10-year if you've got any, because there were scarcities. And I was thinking, a lot of the pension funds and people like that must be doing what I did. So people were scrambling for specific issues. And for the first time ever, the Fed, first time I had ever experienced it, the Fed stepped in and said, okay, bring us the old 10-year and we'll give you the new 10-year. And we'll do it for a basis point. And they were basically doing repo swaps, one security for another, because the repo market had essentially become dysfunctional. And I would imagine some of that was happening yesterday. And that's what Besson was talking about. And I don't know that it changed Trump's mind any, but I think it affected his timing. I think Besson came to him and said, look, this can come unglued. And it came on the face of what John said to us early in the morning, that the banks were nervous about margins. So it looked
Yep.
like, and I wasn't inside, I haven't talked to anybody inside the repo market, but I'm wondering if the repo market had ground down and wasn't really working properly. And when Bissett saw that, he said, it might be time to let out some good news.
Yeah. Yeah. Could very well be. I mean, there were a lot of things that created a lot of potential reasons why the timing was what it was. Either he
Yeah.
believed, if you believe him, yeah, he got what he wanted. He was able to call out China. If you believe the other side, he panicked. He threw in the towel. He caved. I don't know which side is right, which side is wrong. We got to see how it plays out. You know what this reminds me of? It reminds me of the NFL draft. And right after the draft, everybody said, "Oh, they won." The Giants got the best picks. And you see, a year later, they released that guy. So nobody knows what's going to happen until this all plays out. you know.
Yeah, there's some of that, I'm sure. It's a good analogy. Um, to me, it looks like China is in some kind of a box now because 50 competitors have lined up, if you can believe the stories, have lined up. And then China's going to be 51. And I can imagine somebody like India. There's low cost producers all over the globe. They're in Latin America, they're in Eastern Europe, certainly in Asia. And India is the biggest of all of them.
India is on the verge of putting a deal together with the UK directly. Visas, opening up visas. I saw
Yeah.
something in the Guardian yesterday.
Well, if anybody can replace the bulk of China's production, it's India.
Hmm.
Everybody to a lesser degree, Vietnam and Thailand and Singapore and
Singapore, yeah,
probably Taiwan.
Malaysia.
But all that said, sheer size, India can delve into that low cost market. That now China is loaded with tariffs, punitive tariffs, that they're going to have to knock out of the way. and they're saying, "Oh, we're closing our markets to you," and we're saying, "Yeah, okay." We import 3-1 or 4-1 to your exports.
But the question is, if China makes a deal with Europe and Australia, and they have their own deals set up sidelines, you know.
Well, that's true, but they don't have the consumers we have.
Well,
This is the
Europe does.
consumption
The
market.
European bloc does, right? So yeah, selling into the U.S. is by far and away the best possible outcome, but a second best if you get everybody else, right?
But don't they already have everybody else? I mean, aren't they
Yeah,
running the same risk?
yeah. I guess there is, but I guess what I'm saying is I guess they could sweeten the pot to make it easier so they can keep their factories running and keep their people employed and running
Yeah,
forward.
at a discount, at a price, anything is possible, right? But I'm just arguing now that their biggest market, us, is now loaded with competitors saying, "Oh, look at me, look at me, look at me! I can do this deal, I can do that deal." So that could bite into them, and I think Trump is going to come out of this better. I don't know how much better. I don't know if it's world-beating better, but he's going to have better deals than he had a week ago. And
Why do you say that?
why? Because he's unleashed global competition. He's now he's now got all of the producers lined up and ready to talk, and they're salesmen coming here to make a deal. And China has had this market locked up, and now they got an opening, and they're going to get aggressive, I think.
Al's brother was saying Trump should write another book, The Art of the Squeal.
Well, they love him, don't they?
The Art of the Squeal, yeah. Yeah,
Well,
I think he's certainly pinpointed China, and he's got China at the end of his nose, and everybody's looking at it now. I think that revelation in the last 24 hours, if you could believe him, this was all geared towards China and nothing else, and everybody else was a prop in the middle of it, and he caused a lot of people a lot of angst for the last week.
I think Trump effectively sent out an RFP to all the global producers, a request for proposal, and said, "Come on in and talk to me. And I'm suspending these tariff arguments down to that 10% number or wherever." I mean, I sort of lost track of where we are in all this. But basically, he's saying, "All right, come on in." And if he did it one at a time, it would have been, Europe would say, "All right, we'll send a delegation in the spring, you know, and late in mid-May, the delegation will arrive and they'll talk to you for a couple of weeks, and then they'll go back and we'll, And now what he's done is he said, "Look, I'm pulling the trigger. This is where we are, and if you don't like this, come and talk to me." And now they're all lined up. They don't particularly like it, but they're lined up, and it's an opportunity to eat some of China's lunch. So I think they're looking at that. So Trump will come out better. If it's like 3% better, 5% better, 30% better, I don't know. But in line with each of these deals, it's, look, we would like a naval base over there. What can you do for me on that side? And he's tying all of these deals in together. That's what he's saying. This is not one size fits all. He's really saying, we got a lot of issues to discuss here. And if he did it the old-fashioned way, it would be a year or two away. And he even made that comment. He said, "If I did this in my first administration, they would laugh at me." That's what he said. I don't think they would laugh at him, but they wouldn't be in a rush. I mean, let's face it, you got a deal that's lopsided in your favor, and you're not going to rush to change it.
Right.
So now they're sitting down. Whether or not it's going to pan out, who the hell knows? But he certainly got him off the dime.
Yeah, as you said last week, his real salvo was, "Do I have your attention now?"
That
Okay.
was it. That was the message. Do
Do
I
I
have
have
your
your
attention?
attention? Yeah, that's it. Yeah. Um, what can China do? Because China's got a real problem, right? They have a workforce that they have to keep employed. They have to keep all of that going forward. If that starts to slack off, there could be a lot of problems
They could raise
Yeah.
production from the Uyghurs because they don't pay them anyway, right?
Yeah.
Right? They could tell their people, you know what you were working for? It's 20% less now. That's what they're going to do. But you know China better than I do. I've always wondered at what point can they sustain or keep control of a population like that if if the people are not eating.
I know a lot of Chinese that were unwilling to talk in China, but get them out of China, and they're very down on the regime. And I've lived in socialist societies, don't want to live in socialist societies anymore. I've had the strong hand over my neck. I don't want it anymore. So I think the people there, it's a fine line. You know.
They got another problem too from the one child policy that they had. They got a workforce problem. They got a demographic problem. They don't really have their birth rate is probably lower than the rest of the world because they had a one child problem that's coming back to haunt them. So they're not without their problems,
Right.
but
Right.
it's not. They're not in some kind of an indefensible box. They got some cards to play. My worry is uh, if he starts to waive uh, most favored nation status, we start to talk about that. Then if they feel like they got nothing to lose, they will take Taiwan, and we can't defend it. I don't believe we can defend it anyway.
Yeah, well, I still think there's a lot of volatility ahead because no one knows where that's going to turn up. I don't think the Chinese are going to bend the knee and come crawling back. I think it's going to, and he's not the type to, say, all right, yeah, all right, let's let bygones be bygones.
Oh, I don't know. He could do anything. I mean, he's proved he's a wild card.
You know what I did yesterday? I bought some very low delta oil puts,
Yeah, you had
nine
that
months out,
conversation.
9 months out, very low delta. Because if this does worsen, oil could crap out. Do you think we could see oil at $40 a barrel, $30 a barrel?
Not for long, because they'll start to cap wells. We
Right,
ran into that at around $15 or $20 a barrel back in the '80s.
right.
Granted, $20 in the '80s is $30 now, I guess, but it's got to be at a level where they can get enough oil out of the ground. But he will subsidize that, just like he did with the farmers. I did a deal that's going to hurt the farmers. I'll write you a check. So he'll do that to the oil industry too. He doesn't care.
Right. Well, to me, if the market feels that there's a recession coming, oil can get hit, and we could see volatility in oil. We saw it during COVID, where oil went negative on delivery. Right, there was that whole
Well,
delay.
that was
It was a
technical.
it was a technical play, but it was a panic technical play. But I think you could see oil get hit again if
Uh,
things go wrong. To me, it's a cheap hedge.
well, let me take the other side of that. I believe that there's going to be fireworks in the Middle East. I think Iran is vulnerable. That's bullish for oil.
Yeah, but do you think, given what's happening now, we can afford to take that stance? I just saw something what Tucker said. I don't know if it was yesterday, or last night. Carlson said, he says, I was a supporter of Trump. There's a lot of things I don't agree with. He says, I supported him because he ran on policies I firmly agreed with. No more wars, domestic production, close the borders. He said, now he's talking about, looking at what's going on in Iran. I can't support that. So he's
But it
losing.
won't be us. It'll be Israel with us sitting in the back. Call us if you need us. Listen, imagine you, your family are Holocaust survivors or people you've lost during the Holocaust, and you move to Israel. When Israel says never again, they really mean it. And nuclear Iran means again. So they're not going to permit. So you got an immovable force and an irresistible object here. I mean, that's what you have. Israel will not tolerate a nuclear Iran. Do with that what you will. I think that means either Iran caves or Israel takes out their facilities. And how do they do that? They do it with our weapons. We give them the bunker busters and we give them the planes and we put our aircraft carriers in the Gulf. Say if things get out of hand, we're there, but we don't expect to have to do anything. You're going to do it yourself. I think that's going to play out. And I think that's a piece of what's going on with gold.
I think, yeah, well, that and the Chinese, you know. You can't trust the dollar. Dollar's getting hit all over, right? So gold is the only safe haven. I see
Why is
Bitcoin.
Bitcoin floundering?
Bitcoin, I was just going to say, Bitcoin has had a little bit of a rally, but nobody really trusts it in times of true uncertainty. It's great to wave the flag, the Bitcoin flag, but when you come under fire, you run.
There's three things I think that's driving gold. One, central bank buying. Central bank bid is underneath gold, so it doesn't get an opportunity to sell off. There's a bid underneath it.
Mm-hmm.
That's not necessarily driving the price up, but it's holding the price up. Number two, I think there's a technical issue with delivery. I think they're auditing, and a lot of people have lent out gold, and the gold repo market is in flux here. You got people having to liquidate a lot of positions, creating a lot of distortions in the funding markets. And everybody in the back of their mind is wondering if all the gold they say is there is really there. It hasn't been audited. And number three, you've got a flight to quality and a fear. So,
Well, central banks have been buying gold, in my mind, for the last 3 years since the
but are they
Russia
chasing
and
the
Ukraine.
offer? Or are they buying it on the bid? There have been times where cycles where they chase the offer, but there's a bid underneath. Is really what I'm saying.
Yes, but I think what's gone on over the last 72 hours is pushing some central banks to say we don't know what state we're going to be in with the current U.S.
And maybe,
administration.
yeah, maybe so.
Whatever could happen with China. If things really get negative, China's selling bonds. You mentioned something to me yesterday. We don't have shooting wars anymore. We have economic wars,
Yeah.
and we're in the middle of that now. You know, we're in the middle of that economic war now. And what's the next salvo? Is seeing the 10-year sold off yesterday, seeing a bond sold off yesterday. Was that China divesting, or was that China saying, "Do I have your attention?"
Yeah, I think so.
Yeah.
I think so. I think they had a lot of reasons to get out of U.S. securities, and that's
And
one
if
of
they're
them.
doing that, are they buying gold?
Yeah, could be.
Yeah.
That
I
makes
think
sense.
gold is the safest of the safe plays. I've had it for a while. I thought about selling some last week. Unfortunately, I didn't get it off. It didn't come to my price. But
I bought the miners.
yeah, I have some miners too. But GLD has been, I've had it for years now, and add a little bit more and a little bit more, and it always works.
I want you
What
to
do you
think
think?
about something else. I was thinking about this. You drive for 20 hours. There's a lot goes on in your mind. And I was thinking that we got two economic models here, and we're shifting from one to the other. We've talked about this a lot. We're shifting from a public sector, taxpayer funded model to a private sector, risk capital funded model. And the previous model, or the one that we're shifting out of, the public sector model, was an attempt to repeal the business cycle. When you got a publicly funded economy, you don't have a business cycle because
We haven't had one for years. Yeah.
every time a recession shows up, you spend. Now you either print or you borrow if you don't have enough tax revenue, which you don't. And if you raise tax revenue, you worsen the problem. So we've repealed the business cycle, I would say, since Greenspan. Since the Greenspan Fed, helicopter Ben and all of that, Bernanke.
So it's been 30, 35 years now.
Yeah, we've repealed the business cycle. You haven't seen recessions because the government steps in and floods the market with liquidity. So now we're going into another cycle, another model. And I predict, for what it's worth, that you will see business cycles again. You will see recessions and expansions. And when things get dicey, private capital will preserve its money. You'll see the kinds of recessions that we used to see, and they'll be deeper and longer.
Back to yield curves mattering.
What do you mean by that?
Well, I mean, we've talked about when the yield curve inverts, it's a sign, it's a recession sign, right? And it's, like the yield curve has called 12 of the last three recessions, those type of comments.
Yield
And now,
curve signal, yeah.
yeah,
Yeah. Yield curve becomes a more accurate gauge of the economy. Yeah, that's probably true. Now, we do have an administration that doesn't seem to shy away from fiscal stimulus. I really believe if he has to, he'll send out checks, he'll do what he's got to do. I just don't think he wants to borrow to do that. I think he wants to do it out of earnings and savings. And maybe I'm giving him too much credit. But I can see his I can see his plan going forward. And I think it's a valid plan. It's a good plan. I don't know if he'll be able to implement it.
it's a great plan. It's the best plan. Yeah, he's a salesman. He's
That.
he's
He
always
is definitely
selling.
a salesman.
He's
And
always
there's a
selling.
legal term called puffery. Are you familiar with that term?
Yes,
You're allowed to say, "Oh, mine's the best product on the market." That's puffery. You're permitted to say that, even though it may not be true. And he puffs and he huffs. You know, I see so much vitriol for the guy, and I get it. I understand why they don't like him. I mean, he's a personification of "Hello, McFly," Biff, and McFly
that's right.
smacking the head. McFly,
He's the
McFly.
bully.
He's
Yep.
that bully,
He's the bully.
you know. But he's got a good handle on what's happening. He really does, and he's got really good people in place. I will take Bissent over Janet. What's her face?
Yellen.
A million times over.
Yeah, I think what I've seen out of Bissett in the first 4 months basically take him out of any Treasury Secretary we've had over the last 30 years. You know, I look back, Larry Summers, Rubin, who else that you would say was a strong Treasury Secretary?
No,
Yeah, I mean, I don't know. I mean, to me, Bissett, he speaks to the people. He's very cogent. He seems to have a plan. Whether this is true or not, whether it all forms out the way he's been explaining it, I don't know. I think
I would say to you that he's very comfortable in a fixed income trading room.
yeah,
He knows all of the ins and outs. He seems to. He's got my confidence. I like him, and he's heads and shoulders over Janet Yellen. I mean, there's really no comparison to the two at all.
yeah. Speaking of Yellen and her time as Fed chairman, we've spoke about this earlier. Do you still think the Fed is? Let me phrase it this way. Yesterday, a lot of people were saying the Fed's going to come in. The Fed's in an emergency meeting. This is falling apart. We need the Fed to come in and act. The Fed put. We need the Fed to ease. Do you think number one they will? Number two, it doesn't matter.
Huh. Well, you want my opinion or what I think the market's opinion is?
Both.
Because they differ.
Yeah. Yeah.
I think the market, sections of the market will be relieved, and I think the bond markets won't like it at all. But if they see a recession, they'll live with monetary stimulus. If they don't see a recession, they'll back up the back end of the curve and revolt like they did the last three eases. So they really have to see, the bond market has to see justification for an ease. So let me frame it that way. If there is not just markets, but justification for ease in terms of sharply weaker employment numbers, lower sales, corporate guidance going down, all of the signals. If it looks like 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 we're in the midst of a recession,
Yeah, I
if
would
we're
agree
look-
with that. I would agree with that. And I think if the Fed comes into ease because the market's down 12%
that's a
without any
negative.
new numbers.
That's a negative. I
Right,
don't think the market will like that, and I wouldn't like it either.
right. Okay. That's my feeling, because people were talking about, oh, the market's down. We need the Fed to come in and ease. Well, what
Yeah.
doesn't solve the problem. It's putting a Band-Aid over
You
something.
saw a Trump put yesterday, not a Fed put. You know.
And now we have 90 days where anything can happen.
Well, we
90
got 90 days where there's opportunities for good news leaks, tape bombs.
And bad news. You know, good news and bad news.
Yeah, but I mean, it's mostly good news because he's going to do a deal with somebody and he's going to release it. He's going to say, and now if somebody walks off, storms out. That's bad news. Yeah.
But China, you know, anything that comes out of China, I think, is bad news. I don't see any good news coming out of that.
Yeah, but I think the market already expects that, though. I don't think
Depends on how,
anybody's waiting for good news from China.
it depends on how bad. That's my point. Yeah,
Yeah. If they say they're going to boycott General Tso's chicken, we're not going to get any more, that would be a big deal.
that's right. That's right.
All right. Let's
All
cut
right.
this short,
Yeah.
then.
Good chat. Welcome back. All right.
Talk to you later. Take
Yeah.
care.